and welcome to another episode of Puttru's Thought Leader Series. My name is Monica Madwekwe, and with me today is Rumundaka Wonodi, who is the founder and CEO of ZKJ Energy Partners Limited. ZKJ is an energy advisory, investment, and project development firm covering Nigeria and West Africa. ZKJ was founded with a mission to support projects attain bankability. Now, prior to founding ZKJ, Rumundaka was the first CEO and MD of the Nigerian Bulk Electricity Trading PLC, known as NBET. Rumundaka, it's a great pleasure and honor to have you here today.
Thank you very much, Monica. It's an honor and truly a pleasure.
So let's go into the first question. You've played a key role in defining Nigeria's electricity market. What would you say is one of the greatest things you're proud of accomplishing in the sector, especially something that is not widely known?
Thank you very much. It's a question that is very kind of challenging to identify what would be my proudest moment. But I think you've said that which is not known. And what comes to mind is actually defining the trading arrangement within the market, right? So by the time we had started, first, before I got appointed as the Managing Director CEO, I was with the Presidential Task Force on Power, leading the regulatory and reform team. And one of the things that we're doing initially was supporting the Bureau of Public Enterprises on planning the reform, the privatization, and at the same time setting up the organs that would play a critical role in the reform, which was then the NBET, after I had been incorporated before the board was appointed. And we were reviewing the planned trading arrangement, because if you recall, the reform had been started in 2007 and then was stopped. And then so when we restarted, we saw some trading arrangement that had been put in place, which kind of put it that we would have had each generation company have a power purchase agreement with each distribution company or a vesting contract, and then there will be LCs to support all these vesting contracts. So when you look, supported by the bulk trader, so when you looked at it, what you have is about 20 or so generation companies, each with a vesting contract with 11 distribution companies. You can imagine the number of contracts you would have had in the market, and then the bulk trader were supposed to provide an LC to all these. By the time we looked at it, we had over 120 vesting contracts with 100 LCs in the market, and then we decided to change it in such a way that all the generation companies will sell to the NBET, and NBET will have vesting contracts. So that way, we brought it down to 11 vesting contracts, and then the number of PPAs that were existing. I mean, so when you put that out, it's something that most people don't know. But I thought that coming to that and arguing it, because it was a lot of concern that you're going to have this new entity that will buy all the power, have all the vesting contracts. Why don't you let all this? But when people saw the complication in it, the way we were able to reduce the trading arrangement to such a simple structure, but very efficient for the market. I think whenever we look at that and the fights and the battles behind, at least it gives a lot of, it's a very proud moment. And not a lot of people know the implications and the fights that went behind that.
Yeah. I do agree with you, because the last person I spoke to, Dr. Andrew Nevin of PwC Nigeria, talked about how a lot of times in terms of solving some issues, we tend to complicate things more by coming up with very complex arrangements. So I'm really happy to hear how you were able to, direct the situation to adopt a more, simplified trading arrangement. So we'll go into that trading arrangement later. But before that, in August 2011, during the inauguration of the NBET board, the then President Goodluck Jonathan, he described his vision for NBET, and he said that it should be a catalyst for new investment into the power generation market, as well as to stabilize the market for those who are already in the business. So let's now discuss NBET. What was the reason behind creating this institution? What was the situation in the market that prompted the need to have NBET?
Well, the first thing is that you wanted to privatize the distribution company.
Yes.
And primarily you wanted you also wanted to sell the generation companies. So the investors in the generation companies will buy these companies and then sell their power, supposedly to the distribution companies that are quite unknown in terms of their credit capabilities and what have you not. Again, you're looking at the generation stack and making the determination that we do not have adequate power, and
yes.
we expect, as part of the reform, to do things to attract investment in generation. And the question is, when you sell this power, when you sell these distribution companies and you put them out there, could they actually give confidence to people to invest in generation? And we said it is very unlikely.
Yeah.
So you need a bulk trader, central buyer, who is supported by the instruments of government. The federal, the treasury, the Ministry of Finance provides a guarantee to its activities that when it buys and enters fair agreement, that it will actually meet its obligations within the contract. And therefore, there was the need to set up the bulk trader. And, it was provided for in the Power Sector Reform Act. The only thing was that at some point, we thought that we could combine the trading and buying with that of NEMCO and have just one SPV. But, the realization soon came that, the liability management company is to manage liability, and therefore its book expectedly will be in red, right? Because it's holding liability, and therefore it does not have the sufficient credit rating to undertake buying and selling. So people had contemplated it, but once we came to that point, the only thing was to start afresh, incorporate a company, set up an SPV that would enjoy the support and the guarantees from the federal government.
Federal government. So NBET is a very, very liquid, credit-worthy institution. Not minding what its books might say today, its credit rating is that of the sovereign, right? Exactly.
Its credit rating is exactly that of Nigeria. So if you do not believe in the sovereign rating of the country, then you can discount NBET, so that it's not separable. It can be higher than that of the government, but at the same time, it's not any less as far as it has that government guarantee.
Very interesting. Okay. Now, as the pioneering MD and CEO of NBET, you played an influential role in the setup of the Nigerian transitional electricity market. Could you discuss more now how this trading works? You've touched a bit about it, but how does it work? And how does it tie into the vision for NBET?
Well, what basically it says right now, or when we were, if we looked at the fractional arrangement, it says that all the generation companies at the top would all sell to NBET, and then if you have vesting contracts with each of the distribution companies, right? So once it buys power through a proration that had already been agreed by the regulator. So each distribution company receives a certain percentage of NBET's portfolio. Some are 13%, some are 10%, some 5%, depending on the load within the area of the distribution company, all right? And the distribution company are supposed to provide a payment guarantee to NBET, and NBET is supposed to provide a payment guarantee to the generation companies. Not really on the back of that, because some of the risks that NBET wears are not risks that can be transferred to the distribution company. So for instance, if there is a shift in exchange rate, right? The rate could not be transferred to distribution company unless you have an adjustment of tariff. But before you do that, NBET is responsible to make sure that the generation companies are paid. So that is about the type of structure, but the structure also allows for generation companies to sell directly to distribution companies. So it's not a must. NBET is not a monopoly buyer from generation companies. Generation companies are allowed to sell directly to distribution companies, and to the extent possible, NBET should actually encourage any distribution company, any generation company that wishes to take its capacity away from it to sell to the distribution company. That is very welcome. So it's a central buyer, but it's not a sole buyer. It does not enjoy a monopoly. However, now when you say, has it done well in its vision, we find out that anybody who is looking to enter the sector, especially wants to sell, make a huge investment, has a preference to sell to NBET. That's the first choice buyer, and for some, is the only choice buyer. So it's right there in the market, and it's meeting that expectation, probably because of also the backing that the federal government is giving it as an institution.
Yeah. Okay. So let's now look closer into the institution, NBET, as you call it. Would you say that due to the transformations ongoing in the market, there are new roles, opportunities opening up for the bulk trader?
Well, it depends on how you look at it, but we have to be pragmatic, right? NBET was supposed to have been provided some form of liquidity to address shortfalls in the market. And when I mean shortfall, I don't mean shortfalls that come out of tariffs, right? Discos not paying what they've been supplied, but like the issue I talked about, where you do not transfer costs to consumers, maybe foreign exchange, outages from the system, maybe transmission is not able to wheel power from generation to distribution company, and there's a cost to that, right? Those are the things that the bulk trader should step in, because these are things arising from government responsibilities to the market. However, one of the things that we see as a challenge is the fact that right now, even distribution companies, because of where the market is, unable to source for working capital to drive their operation. So to a large extent, you find out that the bulk trader is going to act as a bank. And it's an opportunity to actually go out there and have, I think the way we've gone about these loans and things, we need a public debt, like a bond, right? So you can run a bond, which it can be anchored, and then the proceeds of the bond could be used to defray some of these shortfalls in the market, instead of government doing it by budgetary or direct loan that is provided by the central bank. I think that is suboptimal. It would be better that the bulk trader goes out and runs an infrastructure, a power sector bond, and that bond will be used as part of it to kind of smoothen the tariff until we get to affordable, full cost reflective tariffs, and at the same time make investments. So it's something that you will do probably in conjunction with the transmission company to also get money to fund transmission investments at the same time.
I think that is a very interesting idea. The bond as an anchor, I think, is very, very interesting. I hope that this is something that the institution is looking at, to become more interesting, because if it opens up through, issuing bonds, then you have a lot of private sector participation, people wanting to subscribe to those bonds. Because infrastructure, the gap is wide, and these are, the gap is the same as the size of our opportunities. I was reading the news this morning. Yeah, I was reading the news this morning about, the hike in the new tariff that will be introduced by July. I mean, the disco issues are not an area for you, but if you would like to touch on that, that's okay. You talked about the fact that discos have not been, doing enough, or rather they are not meeting their own expectations to have their working capital. And now we see the government trying to introduce higher tariffs, maybe to support discos to do better. You want to just, speak on that?
Okay, let me just say that I said that the discos have been unable to meet working capital requirements. I have not said that they are not doing what they need to, but the industry climate right now could make it challenging, because, for instance, if you do not have cost-reflective tariffs and things like that, then your lenders might not be able to provide you a credit line, right? So what government is doing now is trying to put in a cost-reflective tariff. What exactly do they mean? They're asking that consumers pay for cost of service, because in the past couple of years, the government had not allowed the tariff to move, to take into account a few things. Some factors have been agreed upon, like inflation, right? Exchange rate, generation output. So at times when you do the tariff for the distribution companies, you would assume that maybe there will be 6,000 megawatts of power flowing through the system, but you end up with 4,500. Therefore, the unit cost of provision of services might have to go up, in the case of it. So some of these factors have been held and had not been incorporated in the tariff. So the government is now asking the regulator to allow these things to flow through, because the government is unwilling to continue to pay for that gap, right? So that's what is coming. But I have a totally, kind of, not totally different, but I have a view about what does cost-reflective tariff mean. Cost-reflective tariff means that the cost of generating power is paid by the consumer. So I agree with that, that is fair. But the question is that service that is coming to the consumer worth that price? So what is the value of that service? And I use a simple example, that if you wanted to make a cup of coffee, and the spoons of coffee cost you 1 cent, and then sugar costs you 3 cents, that should give you, and water, it should give you 5 cents. But you know what? If you go add too much sugar, it might still cost you the same, but then the value is useless to you, because you can't take it. Or you make a pot of soup and then you add too much salt. It costs you the same, but it's not the same value to people, right?
Yes.
So it's important that when we say that this is the cost of producing power, that it actually transfers to the value. So for instance, if I'm a consumer and I leave my house in the morning by 5 a.m. to go to work, I wake up at 4, so that I leave the house by 7, I go to work, my kids go to school by 8 o'clock, and then I return at 6 and go to bed at 11, right? If you were to give me power during the day from 9 till 3, you've given me 6 hours of service. It is useless to me, right?
Yeah.
The service that makes sense to me is that the power comes maybe 4 a.m. or 5 a.m. in the morning, lasts me 2 hours, I get ready, my kids have breakfast, they go off to school, I go off to work. And when I come back by 6, when it gets back, we have power.
Yeah.
We have power to manage dinner, watch some TV, do some homework with the kids, and then go to bed at 10, 11, and then that's it, right? If I then have a little thing to support ventilation over the night, that is fine, right? But if you continue to provide people power without a predictable service and a service that is useful, I don't think that whatever the cost is, that it makes sense to the people, and then people will resist paying. So now we're pushing and asking that we need to have minimum service level that says 6, 7 hours, and then we'll talk about when it comes. Then you can actually see a cost-effective tariff that also mimics a value.
Yeah, for the consumer.
Yeah, value. So that's what will drive compliance more than everything.
Yes. Okay. Thanks. All right. So after you left NBET, you founded ZKJ Energy Partners Limited to support energy projects become bankable. Could you tell us a little bit about this, your company, what it does, and the sort of projects you have in your portfolio?
Well, so we started off, the very first thing that, being at a government, sitting in NBET and everywhere, is that there were a lot of people who wanted to do projects, but they didn't understand what are the key issues that will attract investment either from equity or lenders. How do you get your projects to be bankable, right?
Yeah.
And make it attractive to people. And at the same time, we have people who are coming from other parts of the country, other parts of the world into West Africa, because the work we did in NBET had become a model, right? For West Africa and East Africa. Power Africa was promoting a book on understanding PPAs that actually follows from a lot of work that we did in NBET. And you would see that when it talks about institutional support, you see NBET logo on that book that is being marketed by or promoted and distributed by Power Africa, right? So one of the things we found out is that there were a lot of people who wanted to put money in this sector, but they don't know what projects. There are very few bankable projects. So when we concluded on Azura, you can imagine we had about 16 lenders, equity providers were almost 8, and you just saw the number of entities that were in that, because everybody wanted to get a piece of the pie. And we thought, well, we needed to have other projects that would bring lenders of some class of lenders, not every lender. That was also something that made Azura very complex, because we had development financial institutions, we had commercial banks, we have different types of, we have export credit agencies, national. So it was totally quite a complex deal, right? But if we're able to help projects, then they can attract lenders and equity providers as they wanted. One other thing we look at is investment. So we also invest. We advise companies where to invest, and then also also plan to take a slice and make investments on our own. And then, of course, project development is about the same thing. So those are the 3 focus that we have, advisory to help projects become more bankable, and then we undertake investments along with our partners, and then help in project development.
So now, you've talked a bit about, how you help projects to become more bankable. So I'd just like to say, like, when you advise companies on how to make their projects more bankable, what area are you looking at? What gaps? Is it in terms of putting their, project proposals together, or ensuring that they have the right management team? Like, what gaps?
Well, when you start with project development, there are a few things that are big bulk risk areas that people want to know how you are addressing them. How are you going to address issues of operations? So operations and management, the issue of your gas supply. So it's a lot of commercial agreements that tie together. How are you looking at transmission? How do you de-risk different aspects of your your program. Management is also part of it. How do you attract lending? What types of you see, the thing is this: there are basic things that you have in place, but each project might have each uniqueness, and then you are helping identify the risk and the way to mitigate the risk in that project. So, for instance, you are asking who are we working with? We actually started off strongly with a lot of IPPs that wanted to come into Nigeria, that were already in Nigeria, and they were looking at issues with gas, their power purchase agreement, tariff structures, and how it could work, and alternative off-takers if they were not going to be able to sell to NBET. But the challenges within the market, the macro things about investment within Nigeria, foreign exchange, convertibility, taxes, and then security. Security being the latest thing has made it very quite challenging for IPPs. But on the other hand, there are still a lot of state-owned institutions that are forging ahead, and they're finding ways to move their projects. One of them is NNPC, where they're transaction advisors on their portfolio of projects that almost about 4,000 megawatts that are at different stages of development. I'm sure you've heard about the AKK pipeline, where they're developing some anchor projects in Abuja, Kaduna, Kano. We're helping them on that. I mean, one or two of those, we have helped them onboard the investor group. So NNPC will take a minority position and have the new investors actually drive by owning the majority. So we've helped them that, and we're also supporting that project going forward. They have other projects they have with the international oil companies. We're also providing them support and all the existing programs. So we are working with them. We have worked with another state government that owns a power plant, and other ones, solar projects that are looking to do something with, the ones that have signed PPA, trying to find a way forward with that. Hello?
Yeah, sorry, I had a call. Hello?
Yes, I'm here. I can hear you.
Okay, so that's a very interesting portfolio. Now, as we all know, Nigeria has made some progress, but we still have millions of Nigerians living outside the grid. What do you think it would take for Nigeria to achieve universal electricity access?
I think that we have to adopt new technology, and I must say that on that aspect, we are doing well. There's been a lot of entrance of rooftop and mini grid providers. Nigeria is strongly adopting green energy, solar, for off-grid access to electricity, which is commendable, because what we have done in the past is that our rural electrification was focused on extending the grid, right? So you come up to places like the north where you have very dispersed living population. South is a bit denser, and then you're running these cables over 50 kilometers only to go over there and service less than 0.5 kilowatts of electricity. Megawatts of electricity, just a few homes and things like that. That was inefficient, that was expensive. But now, with rooftop solar, you're much able to do that, because you go to the community and then you put the solar, you put the solar panels, and you're able to guarantee or at least give them access to electricity. So the adoption of new technology, especially renewable energy, is the way to go. And I'm happy that our Rural Electrification Agency is driving that. Though in some instances, they've also encroached into the other part, but that's fine. Very good.
Mm-hmm. Okay, so now your final thoughts. Quick question: is Nigeria doing enough to attract private sector financing, either from foreign or domestic investors? And what conditions do you think need to be put in place?
In all honesty, I think that we're struggling. Within the power sector, There's a lot of alignment issues between the agencies, the rules, the laws, and what have you. But to some extent, we're seeing some form of coming together, and we hope that that continues to go, that there is a harmony between, first, the government agencies, and then the engagement with immediate stakeholders, operators, service providers, advisors, and what have you, and then the consumers. You need education transparency to make it work. And retail is important because it's what guarantees everyone up there, right? And gives comfort for anybody who wants to invest in generation and what have you. So that is about the sector. But there is a much bigger issue, which is actually the investment climate within the country. We've had challenges with foreign exchange, people who made investments, and then it's time to take out the money. There's a challenge because we have limited foreign exchange regime, and there were different windows to access the foreign exchange, and it wasn't quite sure how that will work for people. So without that, that could be challenging. The second is the more important one, the issue of security, right?
Yeah.
How do you invest where people are abducting workers, or where people can actually not get to their sites without being kidnapped, and that is totally very challenging. So you can imagine distribution companies that are in the north, where you have Boko Haram running. I mean, it's difficult to send people out there to go maintain lines and do a whole lot of things. So security is the first thing. Without that, it remains a challenge for most people. But or if it's not a challenge, it makes it very expensive. So people still make the investment irrespective, but not as much as you expect. But then they have to spend inordinate amount of money on the security component, right? Keeping the equipment and staff safe, right? So people are doing that, but it's at a great cost. And that is challenging,
So now moving forward, you said that, we need to fix our security issues, the business be better. And if you were to say, okay, out of these things you've mentioned, this is the most important one that we need to fix urgently, what would that be?
Security. Security is the very first thing. You get it, then we can begin to talk about every other thing. Without security, it's difficult. It's extremely difficult to. People must have a sense of safety of life and property before you do things. So we do that, then we start talking about leadership. We talk about the laws, the regulations, the effectiveness of the regulator, the fairness of tariffs, abiding by contracts, rule of laws, so you contract, you have to be sure that people stay by it and it's enforceable, and a few other things. So there are a lot of things that cascade on, but overall, there's got to be security for most people to thrive, and that's that comes before leadership. It comes with leadership. Well,
that sounds very tough, the security part. Personally, I think it's a tough one.
How can it be tough, Monica? This is exactly why governments are there for.
So it's not 1 + 1. It's not like, okay, go and develop a new regulation or a new policy or implement this or that. It's not 1 + 1.
Yeah, we agree. But without that, it will always make it because I think that, so there is the internal investments, right? Investments people make who live in Nigeria, they have their funds and they want to make investments. That is one.
Yeah.
They still have to consider security, because imagine, even if you were to build power plants, you need offtake, you need manufacturers, you need agri, you have people who go to work and come back and all those things. To go to work, first and foremost, there has to be work, right? So you have to have industries and a productive economy.
Yes.
And if people here are hesitant, if you live in Abuja, to have a farm close to Kaduna because you're scared of driving to Kaduna, then that is a problem. And then when you look at people who are outside of the country looking to make investments, they're going to ask themselves, I have Ghana, I have Uganda, I have Cape Verde, I have Ivory Coast, where, apart from the return, where am I even safe to go to? What is the security before I start talking about the returns on the investment and things and the size of the market? Because Nigeria has a compelling issue, a compelling case when it comes to the size of the market, right? It does have a compelling case, and the gap between our real demand and what we produce today is very attractive for anybody who wants to invest in power. That's why people never actually ignore Nigeria. They continue to keep it, where they continue to watch it, right? But on the issue of so we're competing with other countries, Kenya, Uganda, Tanzania, what have you, and therefore, the very first thing that is up there, we need to manage it: security, leadership, stability of government, which we have now, and a few other things. But yeah, that's why it's critical. I just have to say it.
No, I do agree with you. I do agree with you. Well, we do hope that we find a solution to all these things you've mentioned in the short term as soon as possible.
Yeah, we should.
Yes. All right then. So thank you so much for your time. Thank you for sharing your experience with us. As part of as running the bulk trader and also your own company. Thank you so much.
Thank you very much for having me, and I look forward to having more conversations with you.
You will.